Time for Money Tuesday. Recently, an economic expert on Fox Business News raised concerns the U.S. dollar could be further weakened as some countries like China and Russia try to build an alternative block of currency. But should you be alarmed? Joining us this morning is Marshall Clay with the Wealth Group to explain more on this. Good to see you this morning.
Hey, good to see you, Mike.
Before we talk about how we can guard against the potential impacts, first of all, what is the likelihood, though, that Europe, Asia, more of the world doesn't recognize the U.S. dollar as the dominant world currency?
Well, I think certainly in the short run that concern is a little bit overblown. I mean, since the World War II, the U.S. has generated a lot of trust and goodwill with the global community as being the most trusted currency out there. So I think it's going to be a while before that's truly called into question. But I think there's some things that our country's been doing, spending a lot more than we take in terms of tax revenue, sort of using our position in the world to expand kind of some geopolitical goals that have caused some of these other countries to say, hey, look, we're heavily dependent on the U.S. Currency, U.S. dollar, and we're going to sort of move away from that a little bit. They're kind of growing up, if you will, and starting to kind of buck the establishment.
Yeah, so not to be Chicken Little here, but there are other factors, as you know, that also affects the dollar's value. But let's talk about how do we guard against that? How do we protect ourselves from that?
Yeah, so currency markets are very complicated, but I think for your layperson, there's like about three options that people typically explore. I think the first one is going directly to commodities, precious metals, and maybe even artwork in some cases to hedge against the dollar.
Let me ask you about that real quick. Let's just say I want to go buy some gold.
Okay.
How does the average person, they got some money saved up, I want to buy some gold. Where do they go to buy it? And secondly, where do they store it? In a safe at the house? Do they contact a lawyer, put it in a trust? What's the best way to do that?
Right, you're exposing a lot of the issues with owning these things. These things are hedges, but there's cost associated with going and finding that broker, right? Brokers typically work on commission. So if the price of gold, for example, is $2,000 an ounce, you're not going to pay $2,000 an ounce. You're going to pay $2,000 plus some commission. So you're already in the negative in terms of your hedge there. And then I think you brought up the issue of, well, how do you store it? Most people don't get their gold and then put it on their front porch, right? They buy expensive safes and they have to do all these things to store and protect it.
And if you leave it in a will for your descendants, I mean, they could end up having to go to probate court to get the access, right? Okay. All right.
Exactly.
All right. So, what are some other ways it can, because this can make everything cost more.
Right.
So you got to protect yourself.
Yeah. So I think my preferred method is really looking at very high quality U.S. companies, i.e. the stock market. So finding really large U.S. companies that run very solid, consistent businesses, provide goods and services that people really need year in, year out. And the most important aspect of this is that they have overseas sales. So if you look at companies like Procter & Gamble or Pepsi, and I'm not necessarily promoting them, I'm just using them as an example, that they have between 40-45% of their sales are overseas sales. So if you have a declining dollar, let's say against the Chinese yuan, for example, when they're earning money overseas in China, those Chinese currencies have to get translated back into dollars for reporting purposes. That could actually be positive for their earnings, positive for stock price. The other thing that I like about these U.S. companies relative to precious metals and commodities and artwork is that they generate cash flow on an ongoing basis. If you own precious metals, it's pure speculation on price. So you buy it at one price today, you better hope that 5, 10, 15, 20 years from now that price is higher because it's not spinning off any cash flow. It's not paying any dividends to you. And then I know a lot of your viewers are saying, well, Marshall, I hear what you're saying, but I don't have access to those things in my company 401k. They don't give me any direct commodity exposure, or they don't distill it down to where I can only get in these really high quality U.S. companies. Well, another great option is to use those international funds and ETFs that most 401ks offer. They're going to give you direct exposure to those overseas markets. Now, those
something to look for.
Yeah, those funds can be a little bit volatile and things like that, but over the long term, that can give you some potential hedging.
Protect yourself, because when they're high, you could be low, and vice versa. We're high, the dollar's high.
Absolutely, we talked about rebalancing a lot, so that's key as well.
All right, thank you, Marshall. Appreciate it.
Oh, you're welcome.
You remember the phrase, "I'll be back."